Hey, good morning, everyone. How you doing? Sorry, a little slow getting start for me this morning. What is today? It is Tuesday, July 30th, 2024. For those who don't know, this is Rick. And want to remind everybody that tonight at 8 p.m. we have public e-learning tonight. Topic's going to be, remember, we just rent a chart with a plan. That's all. So we'll be talking about how we just want to rent a chart with a plan. Good morning, Bobby, Tammy, Julie. How are you? JW, Mike again, Sonny, and Alan. Hey, also want to remind everybody that starting tomorrow, Wednesday and Thursday, that's the 31st and the 1st, there's an open house here. So for all you members, we might have one or two other people in the room, guest in here. So thanks for allowing me to do that. I appreciate it. And so for 2 days, let's do that. Anybody out there that would like to join in on us, there'll be plenty links tossed around. We'll get them to you. Check your email, but we'll hopefully see a room full Wednesday and Thursday. All right, let's look at this market. And you know, really, there's not a lot I see different today than yesterday. Price-wise, we're still in this area that is just a bit slow, a bit nothing really, below this line and above that line. And that's just 50% retracements from the top to the bottom here and the top to this hammer over here. That's all that is. But it kind of lines out where the market is just sort of sideways. And so far it's doing it. To be bearish, we really need this to fall down. And if it does, we're going to have a very nice bearish H pattern set up. To be bullish, I'm going to paint this different color just because green doesn't really show up here well. To be bullish, we need it to break out here. So here we have this down move for a low. We've made a high, barely. We need it to settle in and come a little higher. I would like it to go a little higher, then come down, and then maybe break out. And that would give us a clue that we're going to go to the long side, or at least challenge some upper levels here. So right now, we're still in the middle of everything. One of the best things that could have done yesterday was, outside of managing any positions you're in, is to create a watch list. So that's kind of what I've done. I've got a little watch list here. Where'd it go? Guess I better, maybe this is it. Let me put this over here and do something like that. All right, let's take, I didn't mean to do that. Let's take a look at SWK. Now, that thing has had earnings, but I love the chart setup. So this is one of these where, oh, darn it, I missed it. No, let's be a little bit patient. Let's take a look at the weekly chart, okay? You look at that weekly chart, shrink that up, back up a little bit, and look at the base that it's been building here. Beautiful base. Well, now we've broken out of that base. So now what we want to do is wait for the setup. And nobody wants to buy high. Not this high, okay? I mean, I'm all about buy high, sell higher, but I think this is a stretch. So what we do is just wait for that rest. Let that rest come in here. And, you know, we don't know exactly where it's going to happen or what kind of shape it's going to take, but it's always about the same kind of thing. You know, maybe a little bit sideways, a little bit down, maybe sideways, a little bit down. And then what happens, you get the buyers start stepping in for that next leg up. This is a leg. This is what they call a leg. So leg 1, leg 2, leg 3. I'm still looking for a target up here at that 50% mark of about 133 and or the 200 period moving average right here. And that's coming back up halfway from this level of 195 down to this 71 area. So we've got the base created. Now I'm watching for an entry. One of the keys to doing this is however you do it, you can, you know, have your own watch list set up so that it alerts you. You can put lines on the chart so that they're triggered, or be here in the trading room, right here in the trading room, and I'll alert you when I see them pop up. A BYD might be setting up, back to the daily, there we go. BYD might be setting up here. And we have earnings in October, so it's a little bit away, so we don't have to worry about earnings too much. A little bit choppy here on the daily. Let's take this back to the 2-day, 3-day, 4-day, 5-day. And there you can see that it takes that choppiness out of it. You can still see the wicks in there, but it's just calming down now. And that thing starts to calm down. Let's see if that can pop up and break out of these tops. Let's keep an eye on Apple. Now, Apple has earnings coming up. Potentially, I think the chart is a pretty nice chart. We're sitting here with 3 dojis the past 3 days. We're right on that 50% level. I'm not so concerned about what it does today. It's after the earnings that I'm concerned with. So let's just keep an eye on that. It might be one that we want to be in. Apple just might be one of those that I buy before earnings and hold a little bit before earnings, just to play the whole earnings game in there. Amazon is also sitting right on the 50% retracement, and I know it broke down right here, but it's about an area. It's not about a perfect price. So I see the low, the high, lower low, and if we can break out, if we can come through here and hold. When you see a lower low, potentially, just potentially, okay? I'm not making any claims here, just potentially, you can pull an inverted head and shoulders out of it. We do need another low in here, and it could bounce around for a day or two, come down and touch a low, and then move up, and that could give us something in Amazon. There was a couple others that were popping up on the scanner. Let's go look at those too. Let's look at CG. CG is breaking out. Now that's coming out of the scanner right here, pre-market. Let's take that weekly. Look at that weekly J-hook setup here. Beautiful trend. Gave some back for profit taking. Now look at us moving up here. So CG might be one for that watch list that we're looking at. Let's do a QGen. That one's up a little high, maybe. Yeti's a little high. All right, maybe we should go back a little bit. Let's go back to our watch list. Let's take a look at Fast. I don't know if anyone jumped into Fastenal yesterday. I think this is a great looking chart. We start down here with a double bottom. We do a breakout to a high, to a higher low. We've made it to a higher high. We're sitting right at that 50% retracement, coming from that 78 level all the way down here to the 61 level. Everything that you would want, except for the market, okay? Except for the market, is set up just the way we would want it. So you've got price above the T-line, T-line above the trend indicator, and you can see that we have our trend moving right up. The only thing we don't have is the market on our side. Market's very sloppy. Speaking of that, let's go look at the market. Market's sloppy and bearish in some cases. If you take a look at the SPY here, based on just some simple rules, you can see that price is below the T-line and T-line is below the trend indicator. That's bearish. There's red dots there, so I have to lean to the bearish side. We want to be careful in this case because we have not broke down yet, and that 50-period moving average is quite important to technicians out there in the market. So that's one thing we're watching for. If we take a look at the diamonds, they're faring pretty good. They really are. The trend remains up. Price above the T-line above the trend indicator. They're faring pretty good. I think they're a bit sloppy. They're choppy in there. Here's what a 2-day chart looks like. That kind of cleans it up. 3-day chart kind of cleans it up. 4-day chart. Now what happens is everybody stares at that shooting star up there, which it's not getting any traction at the moment. And if you look at this chart, right through there, these tops, this bottom, 399, 06, 05, 399 even, that's a pretty important level, I would say. So while it's swinging pretty good and choppy, we need to watch that 399. Anything below that, we have a problem on the diamonds. IWM, I think IWM is handling itself just fine so far. And the chart is fine until it's not. When we get into the business of predicting, and the truth of it is we do predict, okay? We predict very, we predict like this. That corny thing I say, a trend will stay a trend until it's no longer a trend. That's predicting. I'm predicting this trend is going to continue. I happen to think IWM is perfectly fine right now. A prediction, I look at the chart and I don't go after every single candlestick like this bearish engulf. Okay, I'm not gonna. That doesn't scare me unless there's some follow through to it. So far, there appears there's no follow through, so I'm not afraid of it. The trend remains up. Everything remains good here. Choppy. Nobody likes it, but it remains bullish until it's not. And that's all predicting based on what we see in the chart. But what we're doing with that is it's not predicting out of the blue like I have a gut feeling, That's some serious predicting. But if we sit here and say, well, in fact, the trend is running up, in fact, we don't have follow through, then are we going to say, well, I still think it's going to fall apart? Well, why even look at a chart then? So based on the chart, it's still good. Excuse me. Apologize. Let's take a look at IYT. IYT is just kind of bouncing around. It ran up really high. Thought we were going to get really, really good with the transports. Then they pulled back here. If there's any kind of a positive note we could put on them, we are holding this trend here. I would like to see them move up higher. They're going to have to get past pretty much here, I think. Pretty much 65. If they stay below 65, everything from the transport side is going to stay sloppy. And that also, in turn, makes the market a little sloppy. And then the other one is SMH. SMH needs to pick up. That's just flat bearish right there. Price below the T-line, T-line below the trend indicator below the 50 period moving average. This right here is that 50% retracement. It looks like it's just getting ready to fall through. That's going to hurt the Qs big time if that happens. Remember, we do have some big earnings coming up on the tech side, so that could change that around, or it could make it worse. And remember, we've got some Fed information coming out this week, so that could be kind of important. Let's talk about GE real quick. GE. I know some people yesterday in the room took some profits that they had. I think a couple of people actually bought it as well. I still think it's set up to buy. I think it looks great. I'm still looking at a target of 177.82 and 88 up here. Let's see, we did fast. Oh, let's talk about WBA. That's a pretty nice chart here on WBA. So WBA is currently putting in a bottom here. It's carving out that bottom, and it's absolutely tradable. Absolutely tradable. What I'm going to look for is a little more trading, tagging this top up here. Well, I don't know. Then I might go after that. The more I look at that, I kind of like it. Earnings, We have plenty time for earnings there in October. You know, this might be a nice chart to trade. So coming up to that lip, that edge there, we're looking at 5 to 6%. Up to this next little level, here's 11%. And then to the 50-period moving average, about 16%. So I'm seeing a possible trade here today. Looking good. This would be the 50% retracement of Walgreens coming from these highs right in here, okay? Anyway, I've run out of time over here. I will see everybody at the bottom of the hour for the market to open up. Thank you, everyone, for being here. I do appreciate it. Hope to see you tonight at the public e-learning. And please don't forget, we have that open house on Wednesday and Thursday, okay? Thanks, everyone. See you soon here.